So Nisha, let's understand what triggered the market sell-off. The market sell-off was triggered largely because of the valuation froth and excesses which got created purely in terms of participation. The regulator in a sense came out and they spoke about risk management, and they generally raised a red flag in terms of if this entire mania in small and mid-cap stocks and especially SME stocks continues, it could really lead to a financial problem. That in a sense was a polite reminder that equity as an asset class has underlying risk in it. Fundamentally nothing has changed. The macro position has not changed, but excesses in the market I think are getting weeded out. If you look at individual stocks, of course if stocks are down 30 to 35%, it in a sense will be damaging, and it in a sense will have an impact both in terms of portfolio performance and individual NAVs. I think the way forward in the near term can be divided into two parts. One, not all small cap stocks in this market, they appear cheap, but not every small and mid cap stock is now expensive. There are individual companies in the small and the mid cap space where I expect that in next couple of days bottom fishing actually will start. Markets are showing total signs of capitulation. Everything has come down, everything went up like a rising tide, things have come down, but typically the bottom formation will start, whereas 60-70% of the stocks will remain where they are and they'll stop falling, and 15-20% of the stocks where high risk appetite or high risk money I think will start coming back. So in general, if I would have said, which is a line which we've been advocating, be lazy in large cap, be choosy in mid cap, and don't buy the mania in small cap stocks. But I think now the new line I would like to say is that stay in large cap, still be choosy in mid cap, and perhaps by the end of this week or early next week, you'll have, if you're a high risk investor, you need to revisit some of the small cap stocks. So the Indian bull market is not over. All bull markets, they go through this periodic churn. It's a very savage bull market correction. It'll hit you. It will compel you. It'll force you to rethink about your portfolio. And before you really realize it, it'll actually get over. The only difference is that we have seen a rising tide phenomenon. Everything has gone up. The tide has receded. Volatility will come back. Excesses will come out, the weak players will be out. It's like a tree, when you shake it, the weak fruits, they always fall. I think that is what has happened. But the tree is still blossoming, the season is still right, and I guess that is the way it is.